Hey, this is Big G, or Gene, or Gino, or Dad, or however you know me, and this is lesson 18 about the Bollinger Bands. Now, growing up in the 70s, I had a lot of favorite bands. I grew up listening to the Beatles and the Rolling Stones and um, got into, all kind of rock and roll and all that kind of stuff. But when it comes to trading, my favorite band or bands are the Bollinger Bands. Let me explain to you what in the world I'm talking about. You see here on the screen that I've got the simple candlestick chart for the SPY, the SPIDER, some call it, the S&P 500 ETF. This is a daily chart, and you're familiar with this by now, hopefully. And I'm going to go down here to the overlay section at stockcharts.com, and it's early in the morning. And I'm going to add the Bollinger Bands. And the Bollinger Bands were invented by a guy named John Bollinger back in the 80s. And a lot of traders use this as an indicator to help with price action and just kind of know, use it as a buy and sell indicator, like some of the other indicators that I've shared with you in the last couple of videos. So you'll notice probably the first thing you might notice when you look at the Bollinger Bands is how the price stays inside the Bollinger Bands most of the time. The Bollinger Bands act like a guardrail, just kind of keeping the price inside the Bollinger Bands. What they are is this this dotted line is the 20-day simple moving average. And last lesson 17, we talked about moving averages, and one thing I meant to tell you that I didn't tell you was there are two major kinds of moving averages. There's a simple moving average and there's an exponential moving average. The simple moving average is simply on a daily chart, it's the average price of a stock for the past 20 days. The exponential moving average is the same thing, but it gives more weight to the most recent days. And so some people prefer using the simple moving average, some use the exponential moving average. It really doesn't matter. It's not a great deal of difference, but just to illustrate, let me show you the difference in the 20-day exponential moving average on this chart. And you'll see the red line in this case is the 20 EMA, and it stays pretty close to the simple moving average, the dotted line, but it does vary a little bit. It varies drastically here after this big drop. Because it did give more weight to the most recent days, so it varies away from the simple moving average more. But that's the difference in the simple moving average and exponential moving average that I should have told you in the last video. But we're talking about Bollinger Bands, and the Bollinger Bands have that 20-day simple moving average in the middle on a daily chart. If it's a 30-minute chart or whatever time frame you're looking at, it's going to be the last 20 bars. And then you've got the upper band and you've got the lower band. And these bands are 2 standard deviations above or below the 20 simple moving average. Now, if you don't know what a standard deviation is, don't worry about it. You can Google it. I could explain it to you, but it would take too long. And I'm not even sure that my explanation would be good enough. But don't worry about that, because the default for all your trading software, whether you use stockcharts.com or whatever, the default is going to be on the Bollinger Bands a 20 simple moving average and 2 standard deviations. That's what it means here under parameters, 20 and 2. So you wouldn't want to change that anyway. But if you like statistics and math, you can look up, or maybe you already know what a standard deviation is. The biggest thing is just noticing how they work and how you can watch the price action in relation to the Bollinger Bands. There are several different ways to view the Bollinger Bands and even use them in your trading. There is something called the Bollinger Band Squeeze, and this is a chart of Amazon. And notice how on Amazon you have this wide separation of the bands here. This is after this gap up, probably after an earnings report or something. But then notice how the bands start growing closer and closer together, and they form this squeeze where they're squeezing closer together. And notice how after a while it breaks out, and in this case it goes up to a new high. So you have this thing called a Bollinger Band squeeze. Another illustration would be at Boeing. And notice on Boeing down here back in late August, September, how the Bollinger Bands got tighter and tighter, and they got squeezed, and then they popped up in this case. They even squeeze a little bit here. They start bringing in, not a great example, but you can see they started to turn in toward each other, and then it popped up. And so you have a Bollinger Band squeeze where the bands start coming closer together and get tighter and tighter. And typically, after so many days, the stock's going to make a move either up or down. It doesn't always go up. If it's a bullish market, if it's a bullish stock, it's likely to move up and continue in that bullish trend, but of course, nothing's a guarantee. But a Bollinger Band squeeze just means that something's got to happen, something's got to move. The price has to go up or down after so long. You also have what they call walking the band, and this is a good illustration here at Boeing where when it does break out up here, it goes outside, it closes outside the upper band, and it just continues to walk up the band for several days, even I guess that's a couple of weeks. And so sometimes if it's within the bands for quite a while, when it breaks out, it'll walk up the band for some time. You see this on MasterCard as well. MasterCard has been very bullish in the past year, and you see where at this point it was inside the bands for quite a while, and then it closed outside the bands and it just started walking up the bands. And so this is a Bollinger Band walk where it's just walking up the bands, and sometimes you'll see charts where they're walking down the band. It's kind of walking down the band a little bit here. That's not probably a great example, but you can see how in the last several weeks it's been on the lower end of the Bollinger Bands. You can also trade reversals with the Bollinger Bands. Here's a chart of Fluor, and you notice over the past several months how it's just kind of created these M or W patterns or whatever, just up and down, up and down. It's staying in this channel. And so you could, when it comes to the lower Bollinger Bands, buy here. When it comes to the upper Bollinger Bands, you'd sell it here. Back down to the bottom, you'd buy here. Back at the top, you might sell. So you can see reversal patterns with the Bollinger Bands, or trade reversal patterns as it bounces up and down. This is Facebook. And you see how Facebook has just kind of bounced up and down from top of the Bollinger Bands to the bottom, just up and down, up and down, up and down. Notice another thing is that the Bollinger Bands, or the price, rarely stays outside the Bollinger Bands for any length of time. In this case, almost every day, Facebook closes and trades inside the Bollinger Bands. But you see, like here, it broke out in the lower Bollinger Band here, but it didn't stay outside long. It jumped right back in. It went outside the upper Bollinger Band here, but then the next day, back in. Here we go, where it closed outside the lower Bollinger Band on this day, opened below on the next day, but then right back inside. And so you can see where some traders will trade, a stock if it goes outside the lower or the upper Bollinger Bands. It's a pretty good probability that the price is going to move back to the mean. This is basically mean reversion, where price goes back to the mean, which in this case is the 20 simple moving average. So you've got the Bollinger Band squeeze, you've got reversals in the Bollinger Band. You've seen the Bollinger Bands where the price walks up the bands. And there's one other I'll show you real quick. It's called a lit fuse, and it's kind of similar to a squeeze. But in the case of a lit fuse, that is where the price stays inside the Bollinger Band for 20 days or more. And in the case of wind, you see where this is a lit fuse. I didn't count the days here. But when you see where the price is kind of staying in a consolidation pattern where it hasn't moved a whole lot and the bands are getting closer, some would call that a lit fuse. And I actually trade lit fuses a lot with options, and that's a whole nother lesson. But you see a stock with a lit fuse, I can make a certain kind of option play, whether it goes up or down. If it goes up, you make money. If it goes down, you make money. But again, that's for another day. But you can see here on First Solar, there's a squeeze here, and then it pops up, walks up the band. There's a squeeze here, and And then you can see right now it's kind of a lit fuse where it's just kind of staying the same price in that area. And if it continues doing that, the bands are going to get a little bit narrower, and that lit fuse is going to explode either up or down at some point here in the near future. Last chart for the day is Lowe's, and Lowe's is showing a little bit of a lit fuse, and this is maybe the best example. You can see where it's almost a, goodness, just right here in that tight range there. And so it's just been sitting there at, you know, that 87 price range for several days. So Lowe's is probably going to pop up or down at some point here and do something drastic in a matter of days. So that's the Bollinger Bands. Again, just another indicator to use to kind of watch price and price action. Something that you would use in association with candlestick patterns and moving averages and other things. But I have Bollinger Bands on my default screen, and I'm always kind of watching how the price reacts to Bollinger Bands. So this is just something else you can use to help you in your trading, and I hope that helps. See you next time.